All right, welcome everyone. So thank you guys for having me here today. We're going to be talking about basically my two favorite strategies in the world, especially if you happen to be a newer trader or a struggling trader. And the reason is that they have very set criteria for what to look for in order to get into the trade and how to manage the trade. So the setups are called the Phoenix and the Avalanche. I'm actually going to start with the Phoenix here. And we can look at examples of the Avalanche as well as we go forward. So our Phoenix is essentially a continuation pattern on a brand new trend. And in the case of a Phoenix, we're looking for buy. In the case of an Avalanche, we're looking for short. So our first criteria that we want to look at is going to be something where, let me grab my pen. We have either a range or a downtrend over here. So our Phoenix is often a bottoming pattern. In fact, if you look at this template that I've drawn here, you can see that it also, in this particular case, can look like a head and shoulders or an inverse head and shoulders in this situation. So the Phoenix can be part of a lot of other different patterns that you might already be familiar with, things like uh, inverse head and shoulders, a cup with handle. It can also happen off of a V bottom, and I'll show you examples of that as well. This is a basic template for what we're going to be looking for. So if you want to do a screenshot of this, this is something that you can keep in front of you. Our Phoenix is basically this first pullback that creates a new uptrend. So it's a really nice trend reversal pattern. We saw it this morning on the NASDAQ. We saw it this morning on the Russell. So it happens on every single time frame, every single market. It's just a core reversal pattern. And we'll take a look at some of these examples here from today as we go forward as well. So traits that we're looking for within the Phoenix are ideally a nice average to even a little bit slower than average two-wave upside move off of a pivot low. So this needs to be some sort of major support level that is happening here. And ideally, this is going to be major trend exhaustion. So you can use any of your trend systems like, your three waves for the downside move. Ideally, we will see some sort of momentum shift happening at this low. You're going to get that two-wave move up, and then we want to find a two-wave correction that is going to be slower than the two waves up. So our momentum is going to be shifting here. Now, one of the tools that you can use that works really well to determine, hey, has this corrected long enough, is to go and take a Fibonacci fan, anchor it to the low here, pull it on up to the high here. And what you're going to be watching for is this first pullback low should hook up with the 61.8% Fibonacci fan support level. Now I'm giving you the core, like perfect scenario template. This Phoenix pattern has a lot of variations. There's a lot of advanced versions of it. I'm just focusing on the very, very basics. So think of it as like learning your scales if you're learning to play an instrument. We're just going to be looking at the very basic setup here. So this would be your 61.8% Fib fan support, and this is going to be your 76.4% Fibonacci fan support for this pullback. So what we want to see is overall the two-wave correction is going to be more gradual than our upside move, and the aim is to establish a higher low here. So essentially we're looking at not necessarily the first higher high in a new trend. It can be still a lower high, but what we are wanting to see established is a higher low. So in addition to our momentum. Some of the things that we can also watch are going to be volume. We want to see volume declining here throughout this two-wave correction. So if you're putting volume on your charts, you're going to see stronger volume taking place over here, and then a very marked decline in volume as it pulls back. The volume will essentially look like two little triangles where you'll have a little bit of a spike here in the middle, as it kind of gives you that little bounce between your two waves, and then you'll have a secondary decline where volume will be at its lightest just before this channel breaks out. Now you'll notice I've got a couple of entry points marked here. And this is because the main entry that we're going to be using is going to be the break of the second pullback here to the upside. Now, there can also be smaller little bases that happen in there. So let's say, for example, this is our two-wave correction. You could also get like a smaller phoenix happening on a smaller time frame. So entry one is this full channel break there. Entry two is going to be using a smaller channel break. Entry three would be using this break here of a trend line from those entire two-wave highs and breaking that upside move. So I don't use that a lot as my entry. I'll usually use number three if there's a lot more chop happening in here, and perhaps these smaller trends are not as defined. So that's going to get me into the position. The problem with that, the reason that I don't like it as much is that my stop level is going to be based usually under that fib fan and that second pullback low there. But if you're using a break of that entire channel, entry three, the key initial target is going to be a measured move here to here. Now, normally we're going to be looking for substantially more than that measured move, but this is our core main target level. So what you'll notice is that if we use entry three and our stop is down here, by the time it hits kind of like that initial major target zone, you only have about a 1-to-1 return compared to what your risk is. In a lot of scenarios, we're going to be getting substantially more than that. We're going to be looking for example, 5-to-1, sometimes 10-to-1, just depending upon where this phoenix is in a larger trend. So even if we use the entry number one here, you get in that at about there. Your stop is under here. You can see you get closer to, 3-to-1 in that scenario. So how we do our entry is going to be really important. We use a system called Advanced Trade Management to get into and to exit positions. I'm going to talk a little bit about that here later as we move forward in our class. But it basically entails drilling down to a smaller time frame as it comes into a key zone where setup should take place. So for example, that 76.4% fib fan would be a great location to drop down and look at the smaller time frames. So let's move forward here. And this is a couple of places where this Fibonacci or this Phoenix can take place. And the one we see a lot, that's one of my favorites, is this last one down here. The one here, this is more the template version that I showed you. This is one that can be a little bit higher risk because it has just a pure V bottom to it. But you'll notice that this last one has a more rounded low. And this is going to look exactly like a setup from the Russell this morning. I'm going to show that to you here a little bit later. So take a minute here to kind of memorize what's going on with this chart, because we're going to look back on that here before very long. You'll see there's three lows, a pop up, this zone of congestion. This is our Phoenix right here, and then the breakout for the setup. And in something that has, really strong trend exhaustion, while this measured move can be an initial target level, the main target is often substantially higher. On the version up here, though, this could be a two-wave correction in what could possibly be a longer downtrend. So in this scenario, just looking for that one-to-one ratio can be more accurate as far as your probabilities go. The V bottoms can be a little bit more tricky, and the trend placement could lead this into even going into a head and shoulders where you see an avalanche forming over here. An avalanche is just the opposite of our phoenix. It's just taking everything that I teach you in this class and flipping it over. What you're going to notice throughout here is that I've got charts for you that are from many different times in the past in the market. Some of them are from last year, some of them are from a number of years ago, and I'm going to show you those, but then compare them to the ones that are happening right now. So you're seeing that this is a pattern that never goes out of style. It's going to be valid today, tomorrow. It's going to be valid 20 years from now. So here is our little phoenix. And in this case, you can see you got that momentum shifting. We've got a little bit of a version here where we've got an initial low and a secondary low. So here's our initial low and our secondary slightly lower low. This actually creates a pattern that's called a 2B right here. And over here, you can see that shift where, that momentum is kind of shifting a little bit more, just like we've got in here. So it's a little bit in between these two is what we're looking at right now. So our Phoenix, the first thing that we really like to see is something that is creating momentum shifting. So here we're starting to get that momentum shift, but it's still pretty strong on the downside. You can still get Phoenixes that will happen in here, but they might be just more of that V where it pops it back up and then you end up seeing some lower lows before you get a stronger reversal. So the more momentum is already shifting at support, the more likely you are to get a really strong breakout coming out of that Phoenix. In this case, our Phoenix is very small. In the context of the larger trend, you'll notice that in this portion, if we connect our highs and we connect our lows, your Phoenix is going to be in that upper 50% of that trend channel. That is really important. You can see it over here where it's in that upper 50% here as well. It's in the upper 50%. That's going to help propel it higher when it breaks out of that channel. If it's in the midway zone of the channel, then the problem is it's going to run into resistance when it hits that upper end of the channel. So our strongest Phoenixes are going to be in that upper portion of our trend channel where you're connecting your highs and your lows. We'll see that too here with our Russell here a little bit later. So with our trend development, the first thing we're looking at is it's going to be the first correction following a move off of lows. Now, this move off of lows that we're looking for, what we don't want to see is something that just pops up very, very quickly. Because when we're looking at momentum, if we have that extreme move up immediately, what tends to happen is that even if it tries to give a Phoenix, the continuation tends to be weaker. It has a harder time. Or when it does continue, it continues and does so with a lot of chop. So it doesn't give us like a strong surge coming out of the Phoenix as easily. So an initial extreme pop and then the Phoenix has a better chance that it's going to be more like that as it's coming out of the Phoenix. If the initial pop has average momentum or even slightly slower than average momentum and then gets our pullback, it's easier for it to gain that momentum. So in our trend development, we want not only that support at the low, but we also want average to slightly slower than average momentum for our movement coming off of that low. Here's an example from one of my traders, and you can see that it looks very, very similar to what that initial template was that I showed you. It has that initial upside move with the two-wave movement, and then we get a two-wave correction. Now, you'll notice that the two-wave correction is basically made up of a set of two. That's very normal as well. Especially, we'll also even get like a two-wave little pop in here. So when we're looking at our time development, this impulse move here is a little bit on the stronger side. So it falls into the category of it might struggle a little bit more as it's trying to break out than what we would ideally like. If this initial impulse move was a little bit weaker and then we got our two-way pullback, it'd be easier for it to soar and to keep going out of that. It also means that if we put our Fibonacci fans on here, our 76.4% fan is probably going to be somewhere in here. And we have a very sharp movement to the downside where the overall momentum just is still average to above average on the downside. And what we need is for that pullback channel not to be an average momentum or average momentum pullback. We want the overall channel to be slower than average. So by bouncing here and putting in another two-way drop, it shifts the entire momentum so that instead of dropping with momentum like this, we're now dropping with overall momentum like this. And that is what's creating a stronger Phoenix at that point. What we'd also want to watch would be volume in here. Now, with this two-wave movement, one thing that we can do with our Fibonacci fans is, this is an advanced thing. You guys will learn more if you join me in my live teaching and trading, is that we will hook up the 61.8% Fibonacci fan so that it lines up with this low here. And then that will tend to give us the 76.4% here. So it's an advanced manipulation of the Fibonacci fan. It's something where it's still a very technical reason behind doing it. But that gives us that initial, that additional support in there at that location here. Now, let me clear this here. What you're going to notice is that we also have a little bit of a smaller Fibonacci fan here, but again, or Fibonacci, sorry, not Fibonacci fan, a smaller Phoenix in here. But again, it's a really strong two-wave move up. And so our pullback here is still struggling with the breakout on getting going there. So he marks some Fibonacci fan resistance here that we used to kind of help with target levels. Typical target would be to take this low to this high, and then you would get a measured move. But with the additional risk of the extreme momentum move up here, and then the shifting over here, you want to look at smaller measured moves and that fan resistance, and you're probably around 76.4% for the target zone. The nice thing though is if you're using smaller entry points, you've got a couple of entries. This is like that number 3 entry where you're looking at the entire channel break. If you use the smaller channel break though, your entries down here, if you're lining up your fan, your original stop could be here, but your fan's going to be tilted and angling up. So you can kind of move your stop up as that is creeping higher. So you've got an initial zone here. That's your stop level, and you're still looking at 2 to 3 to 1 on the return compared to the risk, even without it going to that 100% extension in this case. So we talked about momentum. So here's that momentum shift. Also, let's talk about time development here. So one of the things that we talked about with time development is using the Fibonacci fans. So using, for example, that low to that high and then watching for a 76.4% Fibonacci fan support level. Another thing we want to do though is we want to look at this impulse move here and then go back and look at previous impulse moves in the past that last for the same amount of time, and then look at how long of a correction they had before they were able to get a continuation impulse move going or another really strong impulse move going. So a lot of times with our Phoenix, we're looking at a shoulder for an inverse head and shoulders. So you'll notice here is our trend channel on the downside. In this example, we do have a higher high and then we're creating that higher low. This kind of push through this channel break is really great. You might even get phoenixes that are happening on smaller time frames down in here. This is a good level for them to occur. But having that measured time correction taking place, that measured zone of congestion that is formed here, that is what we also want to see for confirmation on our Phoenix on the right side with our shoulder. In this case, we have smaller Phoenix within that bigger Phoenix. And the smaller Phoenix actually gives a little bit of an earlier setup. And since that yellow kind of goes all the way over to here, and you get a trigger for that smaller Phoenix right here, you'll want to be aware of the fact that that early entry could mean that this could pop up like this. It could flush here and then get going so that you could end up with a two-wave correction like that. So you still want to be paying attention to where that 76.4% fib fan is hooking up. In this case, the initial move down is so fast, I will usually use a 50%. Again, that's for a fib fan support level. That's again another advanced thing. Don't worry about that too much here today. As opposed to, our 61.8, but it's still going to give us our 76.4, which kind of gives us our maximum for how that could play out. So if you took this with the initial entry here, what I would just be aware of is that this could go and kind of double the base out just so that you're getting a little bit of that longer congestion forming in there. It doesn't always happen. In this example, it doesn't happen. So I'll usually use this initial entry here and then manage the position from that point onward, where if things are getting kind of stuck here and kind of basing out a little bit longer, being aware that, hey, this correction and then doubling it can give us that next move on the upside there. So initial target level 1 to 1 here. Hits that pretty well, but again, you can see momentum is starting to shift up there. So this is a good zone to be taking our targets at and going ahead and protecting our position. Now, a lot of times when we see a setup like this, this can even go into a bigger Phoenix over here. So it doesn't necessarily mean that the trend is over. Now, we don't know what that larger trend looks like on this particular chart, where this Phoenix placement is on that larger chart. But if this is major support on a bigger time frame, then this could just be the start of a brand new larger trend. So you want to always pay attention to what our larger time frames look like and not just what that smaller time frame looks like. With the rounding here into the measured move, that would concern me. So a lot of times, even if I might initially think, hey, I could hold part of this for a bigger Phoenix, if I see the rounding off to begin with, a lot of times I'm going to protect a lot of the position or most of the position, just in case it goes and does an extra flush at the bottom here. And then we would get more phoenixes forming over here. Since this is the first channel break on the upside, that flush can happen with that rounded high there. So this is a zone where advanced trade management would often get me out of the rest of a position there if I was trying to hold for a little bit more. So I always like to think, hey, what are our what if scenarios? What would this look like if it was going to offer continuation versus what would it look like if it was going to try to flush again to the low? If it's going to offer continuation, it would be much more likely that as it pulls up into here, it will have a little bit stronger momentum than it did over here. And then it would go into more of a base like this, where it would have a little bit more of a pivot high at this point, and then it would have that slower channel like that, where yes, it can still retrace on this pullback zone here, but it's not going to have that strong potential for a retracement. So here is an example that shows us what our ideal volume looks like. And this pattern is one that I started studying and I named back in the 1990s. I first came into trading right kind of in the infancy of online trading. So, we didn't have our lovely little micros. We didn't have basically a million of the options you guys have for what to trade these days. And I was basically trying to figure out, hey, obviously pullbacks into, moving averages, they can work as bounce levels off of moving averages, but half of the time they weren't working. Sometimes they were going really well. Sometimes they weren't going well at all. And what's the difference between a bull flag that works beautifully versus something that goes ahead and traps you? And all of the criteria that we look at for a Phoenix, these are going to be core criteria that you're going to look at for bull flags as well. So you're going to want those two-way corrections. You're going to want the volume to drop. You can see kind of that two triangle zone with the volume dropping in here. In this case, we're going into, looks like, maybe there was some news or something happening here. But we want that steady volume to be happening. We need a time development here that is going to be comparable to other zones of congestion that are going to allow for it to have a strong momentum move coming out of it. So here we do have a little bit of the rounding. Here we got a previous over there. You can kind of see our measured zone happening in here. Then our next hot pivot is here. So we're going from pivot to pivot for time development. This gives us kind of an initial level where it can kind of pop, but we only have a one wave correction in here. One of the things we want to see with time development in a Phoenix as well is that when you're looking at this upside portion of it, the time development for how long it takes the correction to take place should be 1 to 2 times the upside move. So let's say this upside takes 30 minutes. The correction needs to take 30 minutes or 60 minutes before you get your continuation. If it's trying to go earlier, like it does here, so here's our upside, here's kind of that little attempt to pop out of it, it's more likely to be a trap where it's going to pull back to do a second correction. So sometimes what you'll notice is that you might see two smaller waves of correction in here. Looks like, hey, that could be where your buy setup is. But if we look at the time development of this upside move here versus where that tries to take off there, it's too soon. We want to see this at least be 1 to 1 or up to 2 to 1. The 2 to 1 will be more common if the momentum is a little bit stronger here. This is what we would call a shallow Phoenix, where the upside move is generally a little bit slower than average. You get a lot more overlap from bar to bar. It's actually one of the stronger Phoenix patterns because it has a potential for a very, very strong move coming out of it. This is a very short time frame too. Yes, it is. This pattern is one that you can trade on your monthly time frames, on your weekly time frames. In fact, a lot of times when I'm teaching, I'll totally erase time frames so that you guys aren't paying any attention to that, because it doesn't matter what it is. The main problem with a really small time frame is going to be that you have greater chances of getting flushed on the positions, and when something moves, it's too fast for a lot of traders to trade. I use small time frames primarily for entering and exiting positions where my main setup is on a larger time frame. So while this is a really small time frame on this particular chart here, the main setup that I had was probably on something like a 15-minute, a 5-minute, like a 2,000 tick chart, 4,000 tick chart. I'll actually show you that here on the Russell, because I did use very small time frames this morning, but my main pattern was based upon what was happening on a larger time frame. That's a trait that we look at with advanced trade management. So for example, let's say we're looking for a Phoenix on a larger time frame. This could be a bigger time frame support here. And this is coming into the zone for, comparable congestion development from the past. Then that tells us, hey, this is the zone we want to watch for a setup. So let's drop down to a smaller time frame and see if we see another setup happening, like a Phoenix on a smaller time frame. Here's an example of what we do with advanced trade management. So like I was telling you, when we get the time development issue, and this one's a little bit of a larger time frame here, when we got that time development issue, if you look at this upside move here, then the 1-to-1 is the zone where you could have an initial setup, but then it could go up to 2-to-1. What you'll notice here is this two-wave correction. It's early. It's too early. So this is one where I went ahead and I took a position in it anyways, but I used advanced trade management. So when this was coming up into this previous high zone, I was looking at the potential it could do even this before we would try to get another continuation. So I went ahead and protected the position. And in this case, I was doing some smaller time frame management, and I reversed it back into the support. One of the things with our time development with our inverse head and shoulders is that not only can we look at previous congestion zones to give us an idea of how long it's going to take to give us another setup, but we can also look at where that left shoulder is here, down to the head here, and then the right shoulder over here. Look at the difference in time between these two lows and then the third low over here. And that gives you the zone where a setup is going to have the highest probability with, and that's just particularly the case when it is an inverse head and shoulders that you're looking at. So you're going to have Phoenixes where you don't have that rounding, you don't have, a left shoulder to work off of to do that time development, but it is something that adds to that. So in this instance, I kind of did some back and forth action in here, knowing it had a little bit more time before it was in that kind of do or die zone right here, where we would get our stronger setup. With the Fibonacci fans, what you would do is you'd take this low to this high and look for your fan supports coming off of this. So in this case, this would probably be 50%, 61.8, 76.4. That's probably about where those are lining up on this particular chart here. In this case, this choppier move on the upside also allowed for that stronger break on the upside here. So we talked a little bit about targets. Here's another example showing you guys some advanced trade management. So in this example, what you can see is that here's our initial two-wave move up, and overall the momentum is pretty strong. Again, if we look at the upside move here, and we look at the pullback here, this is at a one-to-one level. So there's still the risk on something like this where it could base out and you get your initial pullback, and then you could have gotten a secondary pullback here before we saw full completion of it. So with this one, here we've got our Fibonacci fans. So we've got some support here at 50% and then 76.4%. And then we have a smaller Phoenix right in here. So I went into this with the assumption that perhaps we could get that secondary move for an upside. So as this started to kind of shift in here, you can see that what I did was I protected partials. And then when we came back in, retapped support, went back in. As it hit the 100% target level, things were still a little bit slower than over here. So I went ahead and took more off. Two-wave correction added back in. We have another small Phoenix right here, but a lot of shifting in momentum. It doesn't quite make it up to that 123.6. So this pattern that formed up here is actually called a 2T, and it consists of basically a two-wave correction, a pull up, a smaller time frame Phoenix, a secondary move up. So you got a position where it's basically hugging the lower end of this smaller channel here, and it's creating a trap. So that got me out and flipped me on the short side in here. Again, we're on a very small time frame, you guys. Usually these are things that I'm using because I'm hedging positions on the NASDAQ. This is the MNQ here. I'm usually hedging positions on the NASDAQ, or I'm using them to teach a concept live. So I do live classes every day where we trade and we follow the markets live. We talk about a specific topic each week. And so a lot of times we might be following something over the course of an hour. So we're following its development on a smaller time frame just so that we can see how it plays out during live trading. So this is a setup from quite a long time ago, but I want to show you this pattern here and compare it to today. So what we've got here, this is from 2019, is you can see a nice two-wave trend move, a shift in the momentum, and then our little Phoenix here. Now, what's so interesting about this is that we go and we look at what happened in the markets today. We had this exact same pattern playing out. So let's see here. Here is the Russell today. So this was a trade that I took this morning, and what you'll notice is that we've got that shift with kind of these three lows in here. We have a pop, and then we've got our little base. But notice the little bit of a difference here in terms of kind of our time development where our Phoenix is happening. So we've got a little bit of a Phoenix where if we're looking at a right shoulder, the head, and then the left shoulder, a lot of times this middle portion can have a little smaller head and shoulders. So when you're looking at a larger head and shoulders pattern that is forming in the market, a lot of times what you'll see is a bigger head and shoulders, and then you'll also have a smaller head and shoulders. So you could start to look for setups within that smaller shoulder, but be aware that it could base out for as much time development as it takes to create that larger shoulder too. So starting here and then, to here, and then that will give you your 100% extension here. So if you're putting on your Fibonacci time extensions, you'll go from this low to this low, and then that gives you your 100% zone. And this is where your Phoenix setup should be confirming by. So we could also have setups though that are going from this low to this low to this low, offering some initial setups. So here you got a little bit of an early entry. Here we've got a little bit of that kind of early entry playing out, but it has the nice base to it. However, it's an extreme momentum move up to start with. And so it has a situation where, you know, ideally I'd like to see it do another little base or a retest. Over here you can see it kind of based out a secondary time there. And this morning it did a retest. So I entered it first as it was kind of pulling out of this channel here, and then added into it. Now this is a smaller time frame, but I'm going to show you what's happening on the larger time frame. So I don't remember what time frame chart this is, but it is smaller for today. But the main pattern was based upon something that was happening on a larger time frame. And so this smaller one, you can see the smaller inverse head and shoulders here. And then you've got the bigger inverse head and shoulders there. So this even offered another opportunity here to add back in. I don't know what I was doing. I watched it as it was coming into that zone, but I didn't catch an add-on in there. I added in instead here. This particular Phoenix is a combination of two types of Phoenixes. It's part of a checkmark Phoenix, which looks like this, which is, you know, this portion, but it also has what we call a chevron Phoenix in here as well. These are some advanced Phoenixes. I'm not gonna get too much into those here today, but you're still gonna be looking for your main support channels. This is what we call a no touchy, where if we go and do our time development from this low to this low and extend it here to here to here, you don't want it to hit that trend line. So if you get a trigger where it's breaking out of your channel, which is what it's doing right here, and it's doing it right in the zone of where that measured time development between those lows are, that's perfect for the continuation. So, or if this is your initial setup too, that can be your initial setup as well. But you can see very similar kind of start to it down in here. And this repeats over and over and over again. And this is kind of one of the easier Phoenixes to get into because it already has that rounding off coming into it. Over here, it also has two-wave trend movement to the downside. So that shows us really nice trend exhaustion. This was a double tap of lows after the trend was already exhausted on the downside here. So it was already at really good trend support as well there. Let me show that to you right now. Well, here's the smaller head and shoulders in there. And then here is the larger time frame. So this is really what I was using to go off of. And the Phoenix that is forming in here is right in here. So what you can see is that we've got a nice three-wave trend here. We've got kind of a movement where it looks like it's, maybe trying to do a Phoenix, but it can't give decent confirmation with regard to momentum shift. You got kind of a little bit of a higher high here. So it does that two-wave flush that we talked about earlier, right at the beginning of class. This is what we were discussing, where if it rounds, remember that rounding could have that flush down and then turn around. This is actually a perfect example of that, because notice how it popped up, but it shifts right here. And so it has a slightly higher high that creates that rounding. So instead of this creating a really nice Phoenix right here that can break higher, it does the opposite. And it ended up turning and flipping to the downside. So this is a really good example for those of you that are able to go back and review today's video. Pay attention to what I was talking about earlier in class and how this can go to a two-wave movement down and then create the reversal after that point. So what I was watching was here how the momentum was shifting as it was retesting that low. All of this trading was still in the upper zone of that channel that was happening there. So what I did was I connected this high to this high, put a mirror channel over here, and then transacted it through the middle. And most of that trading was all in the middle there. So when it did the Phoenix here on the smaller time frame, what I was looking for was a breakout that would take it out on the bigger time frame. So I would not only get my smaller Phoenix, but I would also have potential for a much bigger reversal as well. And in fact, this went substantially further here, and I can show you a chart of that. Let me pull that up in the background. So ES, here's our Russell. So let's move this out of the way here. And this is what you can see here, is that here's where that small Phoenix was happening. And then here's where that bigger one went and broke out. So with the time development, this is another situation where, hey, we could have gotten a breakout where it could have gone and done a little bit more of a base before it broke. So you're really wanting to pay attention to the momentum as it's breaking out. In this case, momentum was really solid, nice and smooth. Didn't really have to worry about making any adjustments. Again, the no touchy right here. So it's not testing any of the support levels as it's doing that pullback in there. So as far as looking for, target levels, here to here is the first main target level. That's your measured move target level. Now notice what I did. I didn't go from here and here. I went from where it actually started breaking out and doing that comparison as the measured move, because we're comparing impulse waves here. So this is an impulse wave. Here's a smaller impulse wave. This is a bigger impulse wave. Here's a bigger impulse wave. This entire one consists of a larger impulse move, but I was making comparisons from this move and this move and this move and even this congestion here or this pullback in here to give me an idea of what that average impulse move size is going to be to give me a target for resistance. Now my substantially larger time frames, I'm actually bearish. So this means that I'm not holding this past this target level. In fact, there was a little bitty avalanche up there that I used to get out as it was before we went into our class here. Let me show you where that is. See if you guys can see it. So here's that bigger Phoenix. Let me make this wider here. And here's that smaller one. So you can see kind of initial entry where I added in and then went full size in here. And what we were seeing happening is, momentum was starting to shift in here. We were hitting that measured move zone. Let me put our Fibonacci on there so you guys can see that. So here was the main target level right here. So what I did was, as this went and hit a measured move right there, right at that 100%, I went ahead and took off most of the position. I did leave a little bit to see if the momentum would try to play around with that, but you can see it kind of started to shift in here And this is an avalanche right there. So that ended up getting me out of the rest of the position. I probably would have been better off if I had taken off everything at that full target level, because I did have a measured move right into it. It was that 100% target. We were already starting to see momentum begin to shift at 76.4. So it would have made the most sense for me to have just taken off everything at that zone. But sometimes if momentum is really strong, I'll hold and see if we can get a little bit more out of it. With going into class though, that was something that, when I do my trading journal here after the end of the day, I'll be making a note that, hey, you know what, Tony, kind of made a little bit of a fudge there, kind of a little bit of a boo-boo, could have gotten just a little bit more out of it. Kind of splitting nails though on this, but that does to give you your avalanche for the confirmation that this trend is over, at least, for the short term here. I like to give you guys examples where you're really seeing, things as they're actually playing out. And if we look at our next slide, let me show you what happens here. With what I did for the advanced trade management on, hold on, went one too far. Right here, we were looking at this earlier, and the setup was, oh my gosh, so similar in terms of how that momentum ended up kind of shifting as it was breaking out. Even the setup itself was very similar. You can see here, kind of lining up the bigger Phoenix down in here to this kind of checkmark Phoenix here as well. Then our breakout, and then here's the momentum shifting. So this is 76.4 on this one right here. This is 76.4. So here's 76.4 per our extension. And it kind of shifted that momentum at that spot. So you've got our kind of two-wave main pullback here, kind of the little bitty extra Phoenix there, then that last little push up, and then the rounding off. In this case, it just made it a little bit above that 100% there as well. And again, it led to the downside. So even though this chart is from a while ago, we still see that same action as it's playing out even in today's market. All right, you guys. So I did a 3-week live seminar where we looked at advanced trade management. So like the last chart that I just showed you, showing you how I build into positions and scale out of positions. It was 3 weeks long. It lasted for usually over an hour every single day. And the advantage of this is that you learn not only the strategies that are involved with advanced trade management, but you actually get to see it playing out in real time. You get to see me make predictions about what's going to happen next in the market. You get to see those predictions play out. But with the predictions themselves, you also get to see why I'm making those predictions. So why do I think XYZ is going to go to such and such a level? And what are the things that we're looking at? How can we manage a trade that we might be in currently to get the maximum out of that trade and still leave a little bit of room where we can look for a little bit more out of it? In what scenarios can't we look for more? Where do we have to say, hey, I'm just going to take that one-to-one and get out? I'm not going to look and try to get a little bit more out of it or squeeze anything else out of it. I'm not going to look for a larger trend to be taking place. I'm just going to be looking at taking gains on just this initial impulse move. So the advanced trade management seminar takes you through some of the very basics, and then it gets pretty advanced. This is a seminar. You're going to learn more in this than you probably will many $10,000 courses that are out there. I've been trading full time since the mid 1990s. This is my job, my passion, my hobby. I love trading and the markets. And I really can't imagine doing anything else. And I love teaching the markets. I love helping you guys have like those aha moments where you're like, oh, I noticed that, but I never could quite put it into words. And now this makes sense. Or, hey, I couldn't understand why I was always, failing there and why I couldn't get to um, uh, those higher targets, where I couldn't hold on to higher targets. Do I have any samples? Sure. I mean, you guys can go to my website, ToniHansen.com, and you can watch some of the forward focus classes that I've done in the past. You can even look at some of the classes David has posted. And he's posted previous sessions that I've taught here where I've used live examples in my trading. You guys have seen me, I worked as an independent consultant for Jim Cramer for a number of years. I have taught for The Money Show ever since before they were The Money Show. You guys, I have a very solid background here in the markets, and I enjoy teaching you guys live on what's happening. You can also, I'm not great at social media, but I do have a lot of things that I posted in the past on social media as well. You're welcome to join me on Friday for Forward Focus. It is a session that I do at noon every Friday. It's free. It's a market outlook class. Basically, we look at, hey, what's going to happen next in the market and why? Why what levels are we at? What are some of the things that we need to be watching for? What are the targets we're going to be looking at? We look at different markets. We might look at gold or soybeans or futures markets or Forex or stocks. We could be looking at Tesla. We could be looking at Rivian, RIVN, which just IPO'd. Actually, I am going to look at that here on Friday for you guys. So yeah, you can go to my website, ToniHansen.com. There's a link there for signing up for Forward Focus, so you can get the invitation for that as well. The seminar, this is something that is available for the next 24 hours. So you'll want to go ahead, take advantage of this offer here while you can. Feel free to go research me. I got nothing to hide out there, right, David?
Yeah, and I was going to mention too, like you said, you've been on a bunch of previous sessions on timing research. So if anyone wants to find those, they can just go to TimingResearch.com. And if you scroll down far enough on the right side, there's a search box, and you can just type in Tony's name and find any of the previous events you've been on.
Yeah, you guys, I've taught for the CME group, done a lot of their educational videos and stuff. I'll often teach their live classes as well. So there's a lot of stuff from me out there around on the internet, but social media and marketing and things like that, that's not my forte. I'm great at teaching, great at trading, and that's what I do. So hopefully you guys will be able to join me and learn a lot. We also have trial memberships available for the League of Traders, where I teach every single day at noon. I do guarantee you will learn more in this seminar than you've probably done in any class you've ever taken, though. That's just what I do. So David, I want to thank you for having me on here today. And I want to thank everyone, for joining. And I hope that you've learned something valuable that you can take and apply to your own trading here coming out of today's class.
Yeah. Thanks, Tony. Great presentation.
Thank you.
Thanks for being here.
Yeah, I'll see you guys later. Bye.